Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about venkys India, which I believe is trading at very interesting levels, and if one can hold for 6 7 years, can become very big. So let's understand about the business and let's understand what are the prospects. So let's get started. First order disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about venkys India, his small request that kindly support me on Patreon, and once you do that, help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and number of podcasts that I put up from time to time. Also, if you cannot pay on Patreon, you can directly pay me on YouTube with a YouTube membership. That is a monthly membership where you can pay through Google Pay or debit card as well. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company, Venkys provides a poultry products and they also have they have business in India and abroad. They also produce packaged food brands and their Venkys packaged food brands of you can say chicken, fish, etc., which are ready to eat materials are sold across India, especially here in North India. It is quite renowned and also in West and South and plus in many countries abroad. They also produce feed supplements and vaccines. It is the part of the VH group at the moment. If you look at the numbers, and these are Q2 numbers, this is September quarter numbers for this year versus last year. Sales were up 40%, but profits dropped by 15% to around 30 crores owing to higher, you can say, raw material cost, higher expenses altogether. And most of the companies are facing the problem of higher raw material cost at the moment. Stock has been declining post the numbers, so from around 34 3500 it has declined all the way to 2500. In fact, it touched nearly 3800 4000 and now around 2500. Low debt company, high promoter plus institutional holding. This is a very big positive. And sales growth is appreciable in such a difficult environment where global, you can say, movement of food, grains, and food stuff and everything, freight, etc., is hindered. And there have been issues with, you can say, supplies. Then with logistics, so the performance on the top line is pretty good from the company. If you look at the performance, stock did really well from 2014 to 17. It was one of the best of the stocks performing at that point of time. Numbers was also uptrending till then as egg prices soared from 2014 to 17. The prices really went up appreciably. Started declining with mid cap sell off in 2018, as we saw. We are facing another mid cap and small cap, you can say, downturn at the moment. So this will be one of the stocks that will fall quite reasonably if this continues, whatever is happening with the mid and small cap index at the moment. Culminated with a nosedive in Feb March 2020 fall. As we remember, most of the mid and small cap really had a climax fall at that point of time, and then it recovered more than 150% from the lows and went up to nearly 4000. But numbers have been volatile, so numbers came out very good for a couple of quarters, and then for the last 2 quarters numbers have not been that great, so they have been up and down. And that is why most of the people, or most of the people on the markets like to trade into the stock rather than invest into it. It is dependent on seasons as well as poultry prices, and probably it does well during winters, does not do that well during summers. And raw material cost fluctuations also make it hard to invest into such stocks, because if raw material really soars, raw material prices, numbers could be extremely bad, and so the stock price movement could be 40 50% on either side. And that's why, as I mentioned, that people do not like to invest long term into this stock. But how things are changing, let's understand that. So why I believe it can still be a long-term bet. A trend of eating is changing here in India. So what is happening is with the both parents working and most of the family members working, eating at home is increasingly decreasing. And although because of the pandemic things have changed and people like to have food at home, home cooked food, fresh food, but old habits die hard, that's how they say. And so I believe that going forward, say 2 years 3 years down the line, we'll have the McDonald's, will have with the Pizza Huts of the world, and all these companies again do well. So QSR, ready to eat food, etc., will do even better because people will work even harder to make money as inflation source. So I think it will have a direct impact on the habits of people, and there'll be more, you can say, ready to eat food being taken by family members at home. So I believe Venkys has a foothold in some respect in some of the segments there, and I think that's going to increase only. It is an indirect beneficiary of renewable renaissance that is taking place. So you need to understand that the major problem that Venkys is facing is about storing or with cold chain and cold storage, etc. And once that gets resolved, the cold storage thing, then they will be able to have a system where the movement of, you can say, poultry, movement of chicken, fish, etc., would be much easier at lower temperature with lower temperature controlled, you can say, vehicles easily available with electric vehicles coming in. Plus, there will be easier access to electricity with the solar energy, etc., that would be coming through. So, over the next 5 to 7 years, we could see a major positive impact into this industry, and hence I believe Venkys could see a terminal shift in the way people would look at the stock, because then the seasonality will go away and the company would be able to sell at higher prices at all the, you can say, in all the seasons, and do extremely well. Consumption will only increase going forward, as I mentioned, as the habits have changed. Things will only improve in this front, that people will go out and eat, people will have ready to eat materials more, people will have snacks more, etc. And so these products, or these you can say companies, will keep on gaining market share. I believe market cap of this nature is very low for such a business if it is run professionally. So I think there are two things that have to be that has to happen, that will change the fate of this company. One is the picture of the management completely with respect to how the business need to be run. Either the management changes or the management's way of doing the business change, which I believe will happen going forward, because the management is adamant on making money for the investors, and creating wealth for the investor. And second thing is this cold chain thing, which is the indirect beneficiary of renewable renaissance, that I believe that once this cold chain problem is solved, and there is temperature monitored vehicles that are more or less available, we have the EV thing coming in and many other things happening. If these things fall in place, I think Venkis is set to do extremely well. It is also getting into animal health and medication business, and that has just come through just recently, about a week back, that it has invested something like 30 to 40 crores, or plan to invest 30 to 40 crores into animal health care. Apart from making vaccines, they'll get into animal health care, injectables, etc., which is again a very good business to get into. Many large investors and marquee investors have got into there. If they get their things right there, I think globally there is a lot of margin in this business that they could accrue. Return ratios will only improve as these things fall in place. So what needs to be done? In my opinion, you can accumulate on declines. I think between 2000 to 2200 can be accumulated, and have a fairly long-term view. You will end up doing extremely well with the business. There is some risk attached to it, but the reward could be good. And put less than 10% of your complete holding into such stocks. So this was a video on Venkis. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Thank you.